Leap of Fate podcast fans. Welcome to this week's episode with yours truly, Randy Silver. You've heard this guy's voice before. He's a friend of the pod. He's the dad of the pod. He's our guest this week. It's my father, Dana Silver. Today, he's going to be on to talk about everything around insurance. Automobile insurance, home insurance, life insurance. He's been in the insurance agency or insurance game for 30 plus years. So he wanted to come on and speak about how you can protect yourself, your loved ones, your family, your friends, everything that goes with it. If you remember, my dad, my mom, and little brother came on in the episode after Thanksgiving to talk about everything around just being a silver and what our life is like, coronavirus, how they dealt with it, and what they're up to in their life. So he's been dwelling on this for about 4 or 5 months now to come on to talk about insurance. Hopefully he's prepared. No, I'm kidding you. He is very prepared. He's ready to rock and roll. So without further ado, let's bring him in. Dad, welcome to the podcast.
Randy, man, thanks for having me. It's a pleasure.
If you guys are watching the video, hopefully getting you on YouTube, he's actually in my childhood room. So a lot of that stuff is my stuff that he's now converted to his stuff. So I'm glad to see it. It's all going well.
Childhood room, now my office.
Awesome. And so I think that's a good segue to that's your office. So what's that office for?
Well, currently I work for an insurance company, the same one that I've worked for 26 years. And I do risk and compliance work for 2 subsidiaries of the parent insurance company. But let me just give you a little bit of my background in this world, in my professional life, and how it led me into the insurance industry.
Please.
So I graduated from college with a degree in history, went to law school, got a law degree, passed the California bar exam, started my legal career in the LA County District Attorney's Office doing criminal work. That didn't last very long. The crusty underside of society was just not something that I could stick with for a career. And so I started to work on civil litigation. And so I worked at a lot of different law firms doing general civil litigation. And I found my niche in terms of the defense side of the aisle, or the courtroom. And so anything and everything that's litigated under an insurance policy, an insurance contract that might provide coverage for an insured in terms of defense, I've been involved with medical malpractice, automobile, homeowners, slip and fall cases, all kinds of premises liability, cases, dangerous conditions of public roadways, excessive force involving private security, all those types of cases. And I made a decision for quality of life reasons to leave the general civil litigation side and to go work for an insurance company. It was just more conducive to having work-life balance, which Randy talks about a lot. And
you can see why he lost his hair and I haven't yet.
That's true. Yeah, having 3 sons will cause you to lose your hair. But so working for an insurance company was just a perfect fit that way. And so I did defense work, courtroom work for them for a couple of years, defending insureds. And then I actually worked as a lawyer defending the company against litigation when it would get sued for various reasons. And I've had a host of other jobs that I won't go into within the company, just to continue on to add value. in to this current role that I have in helping these small subsidiaries, startups, so to speak, turn into grown-ups is the phrase we often use. We're going to go from startup to grown-up. And so there's several of us like me who've had a long history with the company who've are helping these subsidiaries move forward and grow.
That's awesome. And again, being his son, I've got to watch him through this over the course of my lifetime. So there's nobody better to speak about insurance with. You guys can tell that he knows it like the back of his hand, the back of the hand that used to slap me when I would do things wrong growing up as well.
No violence here.
No, sorry, I'm kidding. We can't talk about that in 2021. but so, but we're not going to talk about business insurance today because we want to talk about personal insurance and how what you can do to protect yourself. If you get a car accident, if you don't have the right insurance, how does that affect you, your family, your assets? If you don't have the correct homeowners insurance, how does it affect you, your family, your assets? If you don't have the correct personal life insurance, how does it affect you, your assets, your future, things like that? So Dana, my dad, will give us a great overall overview of everything. So I think a great question to start with is just what is insurance and why is it important?
Let's start, Randy, with risk. And
Okay.
insurance and risk, they go hand in hand. And so not that you should walk through this life with doom and gloom and looking around every corner, but it's a risky world. So there's a lot of potential perils out there, as we call them in the insurance world, risks that may occur, which could cause damage or loss to you in your physical being as well as in your personal property. So insurance is a mechanism, and I won't go into the theory behind it, but just simply stated, is a way to help share that risk with the insurance company and to protect yourself against substantial, significant, catastrophic type of losses, whether it's personal to your physical well-being or to your financial well-being. And what I think people often miss with insurance is the peril that they're guarding against doesn't come up frequently, but when it does, they really appreciate the fact that they've had insurance to help reduce that particular loss. But insurance is a product, and you need to be a savvy consumer that way. And so the first order of business out the door is to find yourself a reference, a professional who is valued and trusted to provide you with guidance about the particular insurance product that you're looking into. You want to make sure that what you're buying is going to provide what we call coverage in the event of a particular kind of loss. So very simply, if I buy auto insurance, and one of the reasons why I'm buying it is if I get into an accident, irrespective of whose fault it is, I want to be able to fix the car, and that can be thousands and thousands of dollars. Does this policy provide that kind of coverage for me? And so you can have those kinds of discussions, whether it's with an insurance broker, an insurance agent, or some other kind of trusted advisor. So get with a good reference, and then take the time to read your insurance policy and to get an understanding. The worst place you want to be is that peril or that event occurred, and now I'm going to look into the insurance policy to see what it actually covers, or what part of the policy do I need to refer to. Have a decent understanding. You don't
Yep.
need to be an insurance professional, but if you're having a hard time understanding the insurance language or how to read that policy, then again, go to your reference point person and work through that.
And maybe this is why my father's insurance agent, whenever I look at insurance, he always has that type of conversation with me. Do you want the least amount of insurance and the most amount of stress if something happens? Or do you want the most coverage to know that you'll be safe from whatever happens 24/7? And a good example of what happened to me was a couple years ago in San Francisco. I got in a Vespa accident. I got in a Vespa accident. Somebody ran a left turn yield. I had a green light out of the straightaway. The person that had a left hand yield did not yield, and I hit them. Flew over my handlebars on my Vespa, landed on their hood. I walked away okay, unscathed. Some body aches, but for what it could have been and where my life could have been after that moment, I got very, very lucky. My Vespa was totaled. It was a severe accident type of thing. He unfortunately then lied after telling me it was his fault at the scene, that I actually ran a red light, which I 100% did not. It was a green light. And my insurance at the time was for a policy that I would never have been the reason an incident happened, or if it was a net zero, that it wasn't my fault. I only had insurance on my Vespas. If someone hit me, it was their fault. They would cover it. So because I did not have the right insurance policy, I got zero money from my insurance to cover the fix of my Vespa, and I got zero money from the insurance because it was ruled by the insurance companies, his party and my party, as a faultless blame or whatever it's called, because they couldn't figure it out. So learning lesson for me was I never thought a Vespa accident could ever be considered my fault because I'd be a safe driver, and I walked away not getting any money or anything out of my insurance because of what happened.
So to tack on to what Randy said, we had discussions about his insurance and we'll get into this in a moment. The type of coverage that would have provided for repair or replacement of his Vespa, in this instance, it's called collision. And Randy made the conscious decision to not have that coverage, that he would bear the risk of loss on his own, that he would flip it out of his own pocket to repair or replace the Vespa, that he didn't need that particular coverage. Well, now that actual peril came to existence and he went through that, do you have collision on your Vespa now?
Okay. I do not have it now. The reason at that point I did not get it was I was coming out of college, didn't have the biggest savings. I tried to, be cheap there for a moment, and, it came back to bite me in the ass. Fair enough. And it's not a mistake I'll make twice.
Right. So, oftentimes we don't feel it or recognize it until it actually, occurs. And now you're writing the check on your own. That's a wake-up call,
yes,
so to speak. But an analogy I would provide with regards to an insurance policy as a product is it's like your car. Your car's there on the driveway, on the street, in the garage. It's waiting for you when you need it to go operate it. The insurance policy is just like that. When you need it, and you've been a good consumer, sharp consumer, and you bought the right kind of policy for the peril, the event, the circumstance that you wanted to guard against. In my 30 years, I've seen how that policy, stands up and provides for an insured. I'm not here to tell you insurance companies are perfect. They're not. But it's good consumerism. If you have a problem, whether you're working with a business A in this industry or a business Y in another industry, if you feel you're not getting the service you need or the answers you need, or there's been some egregious error, then escalate it. The person who you're talking to isn't providing you with adequate answers or solutions, speak with their manager. Their manager doesn't help you the way you feel you need to be helped, escalate it to their manager. I mean, that is just good consumer practice that transcends any particular industry.
Awesome. Awesome. And I think that's a good segue to the next question is, what type of insurance can people get? I know people know kind of the big ones out there. So maybe, a bit obvious the question, but just making sure people understand what are their options that they have.
Okay. So life insurance, what's that all about? It provides money if the insured should die during the policy period. Who needs that life insurance? Like all of what I'm providing today, people need to take that information and look at their own particular circumstances and see how it fits and how it doesn't, and make hard choices at times based on various factors or considerations. But life insurance comes in different forms. There's term life insurance where it provides coverage for a particular set of years. There's another product that stays so long as you're paying the premium and you build equity, meaning a cash value in that product. And then you can oftentimes, there's group insurance, often provided by your employer because you're an employee, and it's very inexpensive, and it's accidental insurance, accidental death insurance, or life insurance, and or just life insurance if death doesn't occur as a result of an accident. And so who needs it the most? Again, it's a personal decision, but more often than not, people choose to get life insurance who have families, and particularly the parents. If a parent were to pass away prematurely, and there's children and there's a home, the idea is to provide the same level of existence before that parent had passed. And that's what life insurance will do for you, depending upon how much you get. What has often been told to me in terms of, well, how do I know how much? I'll just tell you my own circumstance. So I wanted to make sure that my 3 children and my wife would be able to stay in the family home until the youngest son reached the age of 21. And so what I factored what my annual salary was and multiplied it or added to when that youngest child would reach the age of 21. And that's how much life insurance, I needed to be able to maintain my family. That's my circumstance. That's my situation. May be different for others.
Understood. So for someone who's my age, who's 28, or millennials, maybe more listeners to this podcast, we probably don't see life insurance as that important. I don't have a family. I don't have kids. I don't have that. I'm healthy, young. Why would I want life insurance at this point in my life?
I'll tell you why. Because we're all going to get older.
Very true.
And we're all going to experience life changes in our health, and life insurance becomes more expensive the older you get. Think about it just logically. The older you get, the closer potentially you are, just in terms of age, to reaching that event of when the life insurance policy would kick in. Also, we develop systemic conditions which increase the risk of that event occurring.
Yep.
And so it becomes more costly to not only get life insurance, but depending upon what's going on physically with people, there are some insurance companies that won't write or provide a life insurance policy for people who have certain conditions, or it's that much more costly.
Got it. And for everyone out there, I actually do have life insurance. I have it through Northwestern Mutual. You guys have heard me talk in other podcasts. I have a Roth RA through them. I have investments through them. And I also have life insurance through them because, as what he just said, I'm paying. I think when I showed him when he met with me and my insurance agent, you were shocked at like what my premiums were, what my deductibles were, because it was so cheap compared to what you guys are experiencing right now. Is that correct?
Right.
Awesome.
So let's talk a moment, about deductibles as we relate them to some of these other insurance products. So a deductible, simply stated, is an amount of money that you pay as the insured when you have a claim. You're sharing in that particular loss in comparison to that deductible amount versus what the insurance company typically pays out under the policy. It's way less for certain. So let's just look at auto in terms of deductibles. Usually it's $250, $500, or $1,000 are often deductible amounts. But you can, select that on your own based on your circumstances. And, with that, your premium that you pay might be affected. So the more you share in the loss, the more deductible you pay, the lower your premium will be. So that's something to consider, is if you feel like the premium amount is too great, one way to try and affect the premium is to carry a higher deductible.
Got it. And so, do you have a real world example that you can share with someone about that?
So I think, again, on the auto side, if I got into an accident and I have collision coverage and I have if I have $250 deductible, so let's say it costs, and we're using small numbers. Trust me when I tell you, even a very small accident, for repair costs, it's very expensive to fix cars.
Yeah, we're talking multi-thousand, if not tens of $20,000.
So my example is just for small numbers. So let's say it costs $1,000 to fix my little fender bender. I have a $250 deductible, so I pay the first $250. Insurance company comes in and then pays the remainder $750. Check me on my math, Randy.
I think that seems right to me.
Okay, so you see now, if I had $1,000 deductible, right, and it costs $1,000, as the insured, I gotta pay the first $1,000 before insurance company pays dime one. So on that particular loss where I described it's $1,000, I didn't meet the deductible amount. It's all out of my pocket.
So the question is, do you pay a higher premium in your monthly payments, giving you a lower deductible? So when the accident happens, they'll give you that money up front because you kind of already paid for it, versus if you have small monthly payments, your deductible might be higher. Say it's $1,000, $2,000. You may have to fork up more when the accident happens. So the bet is, I'm going to protect myself for a big investment, or I'm betting that I'm not going to have that happen and I might have to pay for it in the future.
Right. And it's a personal decision, what really fits with your individual circumstances that way.
Got it.
What makes best sense. Okay. Moving on to the next one.
Yeah, let's keep it going.
Okay. Health insurance. You have to have health insurance, whether you get it through your employer or you get it on the open, market, under the Affordable, Care Act, or through some other open, market. Even folks who can't afford because they don't have it through an employer, or they can't afford it through the open market. There's public programs that provide for health insurance. Health costs and prescription drug costs are just astronomical. There's no end in sight in terms of fix for it, and you just are not able to pay for this on your own. It's just way too costly. There, oftentimes you'll see different types of health programs. One is a health maintenance organization program, which gives greater control to the organization in terms of your healthcare. It's much more centralized. Your options in terms of how the healthcare is provided is dictated to you. What doctors you need to see, where you need to go. Now, on the other side is insurance, health insurance program, which is not as restrictive, where you have the ability to select your provider's freedom of choice. And again, there's a difference in the cost that you will pay for that. I'll tell you that we have participated in both of those kinds of programs, and the quality of the care, whether it was the health maintenance organization or through the other one that gives you more freedom to select, was exceptional on both sides. It's just how those health care benefits are provided to you.
Yeah.
So that's it.
So that's, what if I don't have insurance at all? My employer doesn't do it, or maybe I'm employed and I don't have it, and I go to the hospital. What happens then?
So there's a federal program. It's called Medicaid. In California, California's program is called Medi-Cal, which it's Medicaid by another name. And so it's a government, provided assistance healthcare. And so again, you're going to be very structured under that kind of program in terms of where you need to go to get particular, health, benefits. But, under any of these particular, programs, a physician is going to provide the appropriate standard of care. Someone on, Medicaid is not going to get medical care or treatment that is substandard because they're indigent, if you will.
Yes, understand. When I get a employment health plan, sometimes they have 4 or 5 options, and there's different things to pick. Where do I even start? What do I want? And then maybe again, it's personal preferences, but how do I know what program would be best for me? And how does that work with like deductibles and premiums and things like that?
So going back to how I first started is, having a reference person to be able to have that discussion with, someone who has walked that walk in the past would be a good way to go. The benefits administrator with your company is also a good resource. Oftentimes, companies will gin up their own comparisons among the different types of options. So you have data, if you're a data person, to look to see what the data says relative to whatever it is that they're measuring or calculating with regards to those particular plans. And as you said, again, it really is a personal decision about what you feel, fits your particular needs. And I know when we've had those discussions, Randy, you've looked and you're like, yeah, this option A, this looks more for a family of 5 versus me as a single person. This doesn't seem to really fit me.
Got it.
So sometimes it just jumps out at you.
Understood. Is there anything around health insurance that we haven't touched on yet that you think is important to bring up?
No, except just to reiterate that something is clearly better than nothing. You can't go without
Health insurance, of course.
Right.
Again, you never know when something could happen, just like with all these insurance. So I think we had all of them. I know that you said you came with a real world case study that you love to share with people to kind of tie it all together. Would you like to talk about it?
Sure. Okay. So not too long ago, I was riding my bicycle, and
Side note, he is an avid street biker. He does 60 to 100 miles a weekend easily. He is very big in street biking. So if you could see his calves, they're massive. Unlike mine, unfortunately.
No, I've got I gave you the chicken legs. I can confirm that. So I'm riding my bike, and on the canyon road that I've ridden for close to 2 decades, and there was another motorist who was making a left turn from a side street, and then there was a cyclist on the other side of the road who was in the bike lane, and I heard the bicyclist scream, and within seconds, he was jettisoned from his bike, hitting the front end of the car turning left.
Oh, wow.
On the road, he went rolling. And so I helped him, get to the side of the road. Fire department came, took him away. He was hurt. The driver of the car was clearly, in shock.
You didn't witness whose fault it was?
I didn't see the actual collision.
Got it.
I heard it, and it drew my attention. And when I looked left, the bicycle had disintegrated, and it was like out of a movie. Like there were parts flying all over in the air.
Wow.
I can still see it in my own head. I'm glad to report. I gave a statement to the sheriff's department that investigated it, that the cyclist ended up being okay, road
Cool.
rash and stuff like that. But nobody knew at the time, in the roadway. But so here's how insurance all ties together, in my head. So hopefully the driver of the car had an automobile policy, and that automobile policy is mandatory, as in many states, to require liability coverage. And so the person on the bicycle who was injured, if it's determined that it's the fault of the driver of the automobile, will make a claim against that insurance policy to recover for bodily injury and or property damage.
The bicycle. Yep.
Right. The
Got it.
person on the bicycle. Now, hopefully, the driver of the car on their car, that they had collision coverage because the front left side of the car was severely damaged from the bicycle, as well as the person hitting. I mean, the hood and the fender were damaged. And so if they had collision coverage, they pay their deductible, as we talked, and their car, gets fixed. But I'm going to sexy up the facts a bit. Let's say the car was sitting on the side of the road after the accident, no one's attending to it, and somebody came by and stole a bunch of stuff out of the car. Well, if the person had what's called comprehensive coverage for theft of the car or items within, then the driver could make a claim for those items that were stolen out of the car. The car is going to be in the shop for X amount of days. There's rental coverage that one can pay for in the event that the car is being fixed, so they can find and have a replacement vehicle.
Got it.
And then under an auto policy, there's medical payments coverage that provides, if you don't have health insurance or if you don't want to use your health insurance coverage, it will provide for payment of medical expenses as a result of an accident. If you have health insurance, both of those folks, maybe the driver of the car was physically injured or just needs to go to counseling because it's a very traumatic event to be involved in an accident of that nature. The same thing for the cyclist. So again, working with the facts here, that type of accident could have resulted in a death. And then the person on the bicycle who would have expired, if he had life insurance, would have protected his family. But let's say he didn't pass away. Let's say he was, injured to the point where for a period of time he was unable to work. If he had a disability insurance policy, it would cover his financial loss for his temporary disability. If he was permanently disabled and his disability policy covered permanent disability, then it would provide, a monthly amount of recourse
stipend
right.
from, yep.
Right.
Anything else around that? Or, that was a fantastic real world example.
Yeah.
I think that lays it out very easy. What happens? I think we've all seen a accident or something like that, and hopefully, everyone's okay. But if not, you protect yourself from everything that's happening.
And then just in final, we didn't go into a deep dive of homeowners, but we could go into the same thing that there's homeowners policy, which provides coverage against someone making a claim against you, liability for injuries that occur on your property or something else that's covered under the homeowners policy as you as an insured, or for what might happen to your home, fire, water damage from a bursting pipe, vandalism, theft, from inside of your home, those kinds of things. And then renters policies provide that kind of coverage too for liability, as well as, damage, to your property in the rental dwellings.
Got it. And obviously, I think that one's probably most closely associated with us is like millennials or young people. We're renting,
Right.
homeowners, so we're dealing with that probably maybe more than others. But as you've just explained very well, we should be really thinking or having all of it all together.
Yeah. The one last thing I'll leave you with. Here's your homework. Leap of Faith fans. Do your own risk assessment. Like if my computer was was stolen or lost or destroyed, could I pay for a replacement on my own, or do I really need that kind of help? And then if you're like, I can't shoulder that financial loss all on my own, then, go to your reference or find one to figure out what's the best kind of insurance I can get against what risk that's of concern, to me.
Yeah. And take that from your computer to your cell phone, to your automobile, to your personal belongings, to your home, you're renting, and do that each time and protect yourself, not just for today, but for the future, because it's really important to make sure that you keep yourself financially stable, and that will help you with your mental health, your physical health, all the well-being that you want to be successful moving forward. So with that being said, I think you've done a great job, Dad, of sharing that. I know insurance isn't the most glamorous things to talk about sometimes. Sometimes it's a little bit harder to comprehend, but I think you laid it out in very easy terms for people to understand. Maybe, again, not the most sexy podcast from Leap of Faith that we've talked about subject-wise, but I truly think one of the most important ones to make sure that you, your family, your friends are protected from anything that could happen mentally, physically, health-wise, financial-wise, so you stay on the correct course. So this is really important to share. So thank you for coming on.
Oh, thank you for having me, Randy. Anything for you, my Randy man.
As he always says, his favorite middle child.
That's true. That's my phrase.
now, so we'll see. Do you know the sign-off? Hopefully.
Oh my God! How dare you! I am so insulted. Are you ready to go together?
You can lead it this time if you know it so well.
All right. Stay healthy.
Stay healthy.
Stay wealthy.
Stay wealthy, fans.
Have a good week, fans.
Have a good week, fans. And you know what we say.
Deuces.
Deuces. Bye, everybody.
Love you, buddy.
Love you. Bye.